And you are a go, sir.
Okay, give me one moment. Let me share screen. Now, this isn't going to be the most visual representation, like not prettied, I guess you would say. So what is a short squeeze? Okay, so basically you have what's called, you have different investors that are long a stock. So they're bullish and it goes up. And then you have short stock, so bearish. So when you're dealing with that stuff, typically if you're bullish, you want it to go upwards. Give me a moment. Okay. So this is going up. This is going down. Okay. So a short squeeze happens. That there's just a couple things that I have to explain to make it more understandable. So when you talk about a bid or an ask, so you have a bid and ask price. So your bid, I'm just going to go with cars because a lot of people can relate to cars. So if I have a car, I'm really good at drawing cars. Okay, it's a convertible. All right. It looks like a rabbit. Okay, that's stupid, but all right. So I have a guy driving a car and he wants to buy a new car. So if he wants to buy a new car, he's going to drive down to the dealership. So think of the dealership as the marketplace. So you've got this guy, and I do silliness on purpose so you can remember it. It was a professor and a teacher, so I felt that was a good way to make people remember. So you go to the big guy. He's the dealer. And he's got a whole bunch of cool cars. I'll do a triangle car. I'm just doing shapes now. We'll do a parallelogram. And so each of these cars, they have an ask price. So we'll say this is $10, this is $11, and this is $12. So what am I getting at with all these? These are different stocks. Do a circle with circles car. Okay, I can do that.
Oh my gosh. It's red. That's 13 for sure.
Yeah, I can change that. All right, and then yeah, we'll do 13. So this guy comes up and he says, hey, I want to buy a car. And the dealer says, okay, you can buy this one for $10, this one for $11, this one for $12, this one for $13. So these are different stocks. So let's just say he's going to choose one. And just for easier math, we're just going to choose the rectangle car. But there's a problem. He's got a whole bunch of other different people that want to buy this car. And so, and this, again, this isn't talking about the short squeeze. This is talking about the bid and ask price. So this dealer is saying, okay, $10 for this, but then he's got all these other people and everyone else is going to say, hey, okay, so, so your ask price is going to be what that is. Look like they drive on potatoes. That's cute. That's cute. Now, everyone else is going to say different prices. $9.99, $9.10. $9.74, $9.80, $9.90, and then someone says $9. So your bid price is going to be, you'll see it, it's on a table. If you have, certain brokers will show different things, but your bid price is going to be the highest price for the bid. So your bid is going to be $9.99. But the dealer is going to ask for 10, and you'll see it look like this with an X, or some may just say bid ask. So this dealer may adjust his price. And so the dealer may say, hey, I want 10. This guy says 9.99. It's like, I don't know. I kind of want that 1 cent. So he'll say, okay, I'll take it for $9.99. So what happens is now these prices change to $9.99. Now, this this stock, so this guy has more than one of these rectangle cars. So now he may say, I could probably sell it for $9.99 instead. So I'm going to start selling these for $9.99. So your ask price has now changed from $9 to $9.99. Now, what's the first bid that they see? Okay, this guy wants $9.90. So your now new bid is $9.90. Okay, that's what the bid and ask price is. So now let me get into shorting. So when we deal with shorting, and I'm sorry I have to get into some of these definitions, but you just really have to understand it. Hopefully Dan and Connor see where I'm kind of going with this. I'm just trying to see if you guys are nodding or not. Okay, all right. So shorting, it is going back to they're doing they want things are bearish. So now we have this car dealership guy. Oops, it went away. Copy. So we have this car dealership guy, and there is another person out there. I'm going to try and draw like a bad person. We've got this guy, and he's got a monocle, and he's got a top hat. Oh, let's do a top hat. Oops. And oops. Sorry, guys. I'm trying to make it look really kind of goofy on purpose.
Chris has a dream of making cartoons, if anybody can tell. You know?
Yeah.
So
and he likes the money bag. Okay. And so sorry. So this guy talks to the market, the dealer, and he says, hey, and he's bearish. So there is just the way that how the market works is he'll say, hey, I kind of want to buy this stock, but I'm not really sure if I want it for this price. So he'll go to another broker, and the broker will buy this car. Let's say it's still going for $10. So this guy says, hey, I want to buy this, but I'm not quite sure if I want to pay $10 for it. So I want to short it. So the broker says, okay, we'll be the middleman with this. So they buy this, and I'm doing very, very layman's terms. I know there's a lot more technicalities and stuff, but he says, okay, we'll short it for $10. Now, this other, these potato cars, or one of these guys, he says, hey, I'll buy the car. But he does his bid price for $9.50. And that's what the current price is going. So the guy says sold. So he buys it for $9.50. Now, he said he wanted to buy it, but the broker held it. So this guy, he had the value of $10 for it because that was the current bid price. So the price that was able to be sold for. So he now can say, hey, okay, I want to buy it back. Boop, he does. But this guy bought it, at this price. And so it's just like a giant circle. But basically, if you short something at $10 and the current price is $9.50, you made 50 cents on that vehicle or on that stock. Okay. So that's kind of what this is. Now, a short squeeze, that happens so these cars, they're now going up in price. And let me get it a little bit more, minus the interest on stock. That's true. But so basically a short squeeze is there's a bunch of those money bag people, and they're trying to say, hey, we think this car or this stock is, so GameStop, they say, hey, GameStop is not doing well. It's the next blockbuster. So they're going to short it, and I'll just put it, they short at $20 times 1 mil shares. So that's 20 mil. Now, a short squeeze, so what technically happens is short squeeze is when a short seller buys back the short at a higher price, thus driving up the bid and ask prices. So when you deal with a multitude of people, so the market, I mean, there's trillions of transactions. I'd go a trillion transactions, if not more, yeah, per day. So when you have multiple people bidding on something and wanting to buy something, so for example with GameStop, what was technically happening is a bunch of people, because of the good news, if that's what you call good news, is they were buying, the bids were being higher. So $10.10. Then this guy wanted $10.12. This guy wanted $10.20. This guy, I'm going to do the memes. This guy wanted 1,000. Okay. So whatever the lowest price is, they'll want to get out of it because that would be what's considered the bid price. So when you do market orders will do the reverse. So if you're trying to buy and you do a market order, that tells the market immediately you want it whatever price is being offered. So that's the ask. If you were to sell it, it will go up the bid. And then if you do the shorts, it would be inversed. So if this Moneybags guy bought it at 20, but now these changed, I probably should change these. So let's say now this is $200. This is $300, $400. Well, what's going to happen? He's going to buy this stock. So one share will now cost him $200. So he lost $180 on this share. Then it goes up to the next point. So it'll go up to the next bid part, because that's what people are bidding. I'm sorry, going to the yeah. So then it will go to the next one. So now the next one that will fill to buy back that stock will go at 300, then it will go at 400, and then ultimately to the higher point. So that's what's called the squeeze. So if they hold their shares and don't try and put a bid for them, then now brokers can then, if they want to short, they can short the shares. But when the shares become harder to borrow and the share price goes up, that will create a squeeze, because these bids are increasing on good news. And so therefore, this guy, he's going to want to get out on whatever the cheapest amount is. So that's kind of how it's going on. Dan or Connor, did you want to add to any of that? No? So what's going on with GameStop is a lot of people are buying at higher prices to then increase the share value, which will create a pressure on it. That's what the squeezing terminology would mean, is they're putting pressure on some of these people, and they may be more adamant, they may have more money. So if they don't get out at a lower price, they have a potential to then lose out on a higher bid. I'm sorry, they will lose out on the lower bid or ask in that case. So that's what you have to be worried about with the short squeezes, and so that's kind of what's happening with GameStop. So, I even was saying yesterday that GameStop would probably hit 300, which it did. Because at first I was looking at it and I was like, what is this going on? Then when I started to see more of the rationale behind it, it was making more sense. It just took a couple days to figure out. Other people were on board last week, November, but I'm more data driven. So I wanted to see kind of how the people were responding. So if this keeps going up, even if the stock fundamentally doesn't make sense, like GameStop fundamentals, that would mean like their balance sheet, their debt, things like that, doesn't look too strong. However, with this not attack, but this market being with GME. So I kind of talked about the short squeeze. So this is kind of going off on a tangent to explain further in. So Connor, I don't know if you want to just stop it prior to this. But what's happening is, even though fundamentally this price range may actually hit, it's possible, but the higher it goes up, the more people will have to get in at a higher price to hold it at that price. So then that's kind of who's going to fold first on a poker tournament or on a poker game. So that's how the short squeeze is occurring, but it can't hold that price. Because then the market would have to trade at that. But then there's other companies that will want to get on that, because then maybe they can go long on it in hopes that more people will drive the price up, then sell it at a higher point. So then those shorters, it's just kind of like a whole circle. So more people will then kind of buy it in, not because not because of the shorting people, but because of the short squeeze that's happening. They want to get in and try and make more profits on it, and it just kind of keeps on circling back and forth. And then what can actually happen is if GameStop wanted to do a secondary offering, and they say, hey, we're going to offer another 20 million shares at $300. Holy crap! Because think about it, they have their stock price at maybe 250 right now. That can shoot the price up. And I'm just saying this would be more market strategy on how to get more funding to get them out of their hole. So this is a good opportunity for them. But then again, that goes into more technicals and more financial things, because also some of those shares can't be sold by board of directors because they hold more shares and they're a part of the organization. So if you own over 10% of shares, you have to file I forgot the form. Maybe Dan or Connor knows the form number, but you have to file and request it, and you have a certain time. You can only sell so many shares per day. Then after, I think it's a 90-day waiting period. Is that what I'm remembering? It's been a while since I've done more of the technical stuff on brokerage firms, but let me read some of the questions real quick. Over 200% of the floating shares are short right now. To Rick, are you talking about GameStop? Marcel, how high is your guess? Wall Street Bets is very adamant at 1,000. I didn't even think it was going to hit 100, but then I saw how it was rising and it could hit 300. I don't know, but again, like we were saying in the original call today, it's going to be whoever folds first, and it will likely be a domino effect. Short squeeze caused them to potentially go broke. The companies, or I'm not sure. Just be a little bit more specific.
So one thing I do want to chime in here is short squeezes are not good for the company itself. Like GameStop is not going to come out of this any stronger. I mean, they might get some publicity, but if you look at Tilray was short squeezed. What I think it was either 2013 or
300.
Yeah. And the guy today, the CEO of Tilray, said, guys, this is not your company. The stock's not yours either. So there's not much you can do, because it's not like the CEO is going to dump a bunch of his stock at that top price because he wants to retain ownership,
And he can't. I mean, he can only do so much. So that's what's also, because you've got outstanding shares, you've got floating shares, you've got restricted shares. So restricted shares would be ones that are owned by people within the company that have a higher stake and ownership. Institutions that could hold on to it in regards to their retirement plan. So there are retirement, stock plan retirement. So if you can sell your shares, but the firm holding it, the institution holding it, can't just sell those. Yeah. They could also, but it's still. Then again, I don't know this part because this is more specialized, and I don't know if they can hold, if firms can hold or short institutional shares, but those are considered restricted shares. So maybe I answered my own question, but that I don't know on that. Because I know if you have a 401k, you've got shares in there, you have to call your 401k person, which then they contact the brokerage firm, or you contact them, then they can make the sell. So, and and when they sell that, I wasn't in stock plan services at Charles Schwab. I was just a general brokerage or broker. So, so with GameStop, could they go bankrupt? I mean, they have publicity, so more people may be looking at the company itself. This would be more of a marketing and not really a stock market thing, but marketing and finance. So they have a lot of options to do right now, but I won't go into that. But let's see. How do interest on short stocks work? Okay, so if you short a stock and that stock pays a dividend, you have to pay that dividend on that dividend date. So if you have a stock that is $10, and you want me to share the screen still? I don't think I need to. But if you short a stock, and if the dividend payout was maybe 50 cents, you have to pay that. So you still have to maintain margin as well as, or still maintain the margins, but you lose 50%. I'm sorry, 50 cents. So you just have to be careful when you're shorting stocks too. Very, very risky doing that.
Does anybody else have any questions or anything? That was a good explanation. But one of the big things is like people keep asking, when is it going to be over? When is it going to be done? You know,
no one knows.
What's the target?
Yeah, there's no the retail traders, they're looking at 1,000. It's possible, and I say that very hesitantly because I don't want to say, hey, yes, it's going to hit 1,000. But after seeing this week and just the craziness that 2020 brought us, it's like I was even talking to my mother, and she's like, "You think it's going to hit, a certain price?" And I was like, "There's been so many weird things that have happened in the last year. I have no idea anymore. This market is so different than what it was. I've done this for 7 years, so." And I'm still younger, and so I haven't seen everything. But in regards to, has this ever happened before? No. Has similar things happened before? Yes, but not to this extremity. So how high can it go? It ultimately depends who folds first. I know once when GameStop earlier today hit $320. I don't know how to pronounce it. Citron, and Melvin Bank Financial. They said, "Oh, we were already out." Well, if they said they were out, because they said that was out when it was at an all-time high. So again, that could be to be more market manipulation, but we don't know. They have, because in terms of the shorting, they only have to file every month what their positions are. And that's what's also in the talks is like, should people or should firms disclose every day or week or month? Because that's not following all the due diligence, because how are you supposed to know? But going back to where it's going to hit, I could see it more probably hitting 300 tomorrow. If it holds the 300 or the 350 by the closing, so that would be 6, I could see 500 Friday. And again, these are very gross estimation, or like very, very loose estimations, because like right now, GameStop closed at in terms of aftermarket, it closed at 292. I'm pretty sure at 2 a.m., which is when the market opens for me, there's probably going to be a slight drop because people want to take profits because they're going to get scared. But then there may be another rally that will occur to hit the 300, 350. But it's anyone's guess. That's just from what I've seen. I'm just going by what I've seen and seeing how hot, like the range of what's going on. But one thing is, if once it starts selling and it goes like super low and people are in at that $350, $300 range, they're going to want to get out. And that's kind of like the squeeze in itself too, because retail traders, do you really want to lose $300 on a share? Like, yeah. I don't.
So another big thing that we're lucky that this is happening. So, because we get to learn it, get to see it. If you're new, the market isn't always like this. It's not, I'm not even talking about the short squeezes. I'm talking about the market in general for the past 6 months, a year.
Yes. Yeah. Because this is a new time, because this is what's essentially happening. I mean, there were day traders in the past. There were a lot of things. But what happened was when COVID-19 hit and a bunch of people were losing their jobs, also people on lockdown or quarantined, and they couldn't make money because they were hourly, or even the salary, maybe they cut back their wages. They needed to find something to sustain themselves because they had families. They had to feed their kids. They make their mortgage payments, their rent, everything else, or just essential needs. So what is something that you could do at home and could potentially make money? The stock market, because it's electronic. And so more people were getting into it, and then institutions were like, hey, money bags, let's profit off these people. But then people started seeing like, hey, wait a minute, like market manipulation in terms of releasing, this stock, and I'm just going by what has been stated. So Citron said Palantir was not good, and it's not a good company. So there was a major sell-off. Dan, maybe if you want to chime in more on that specific time frame. But then people were starting to say like, well, wait a minute, this company looks pretty good. Why are they giving it a bad outlook? Why are, when the earnings report's really good and the financials are steady, why is the stock falling down? And so people are thinking like, and again, there's no right or wrong answer yet until we find out. Is there more market manipulation than we thought in the market than we thought that there was? Like, is there even more? And where are the firm stances on the retail, the little guys, that want to invest? So that's what a lot of the sentiment is going into right now with all these stocks and the volatility. So hitting that price target's really, really hard.
Yeah. All right.
Well said.
If you guys have anything else, I think we'll probably jump off. Just because I've got to get to dinner with mine and I'm like recording it all. But feel free to reach out to any of us. Chris, myself, Dan, Ryan, anybody in the group. Obviously, the group is like our number one resource, so please use it. If you have a question, ask it in the group so everybody else can get an answer. Please keep coming to these. This is the most we ever had. So we'll probably, since we had 89 people in here tonight, we'll probably put some more effort into these things. And everything that you guys do brings us, joy that we can kind of help you do this, and we're kind of in it together. We're a family. So check out the newsletter if you don't have it. I highly recommend it. It'll only get better. If you need Dan's phone number, I can give that to you as well. But yeah, just let us know. But have a good evening.
I want Dan's phone number.
I can give it to you.
Oh, sweet. Thanks. Can I text you at 3 a.m., buddy?
Yeah.